Thanks for being here today for Spar's Beyond the Stats podcast. And we are going beyond the stats today because we're going to be talking mortgage and insurance. I'm Jennifer Kovacic, Spar's Communications Director. And with me today is Erica Brudd and Jordan Potts. And if you guys would just say a couple words and introduce yourselves, that'd be great.
All right. Thanks, Jennifer, for having me today. I'm Erica Brudd. I'm an insurance agent with Comparion Insurance and Liberty Mutual. Have been with them for 18 years and part of the affiliate committee at SPAR for 18 years as well. And just some background, previously just writing with Liberty Mutual, but now am an independent agent writing with numerous insurance companies.
Thank you.
And my name is Jordan Potts. I am with Movement Mortgage. I'm a mortgage lender, also an affiliate member of SPAR, and on the communications committee. So that's how I met these two lovely ladies. And excited to be here today to just give a little bit more insight on our side of the industry, because insurance and mortgage have had a major effect, I think, on the real estate market over the last 2-3 years. So.
Well, absolutely. And you work in such tandem with realtors. So it is great to hear a couple other voices on a related topic and really how mortgage and insurance work hand in hand in real estate. So I thought just really quick, I'd give a little synopsis just with the housing market in general. Homes, obviously, as both of you know, are one, if not the largest investment for most people. And with that comes insurance, and for the majority of people, also mortgages. It's no secret that insurance and mortgage rates and home prices have all been going up significantly over the past few years, and especially since that historic low mortgage rate, largely due to the pandemic that so many people were excited about, and until I think recently, a lot of people were thinking might come back, although chances are we won't be seeing that anytime soon. In fact, a recent stat by the National Association of Realtors data shows that median sales prices of existing homes are near record high right now. According to NAR's chief economist Lawrence Yun, home prices have also risen more quickly than wages, a reality that intensifies affordability challenges, and anytime home prices outpace people's incomes, it's not a good thing. The result is a squeeze on first-time homebuyers especially. Although repeat buyers, they might be able to rely on gains that they have from their housing market and stock portfolios and all of that first-time home buyers may not have that luxury. So a little bit of background, but let's jump into insurance here a little bit. As I just said, lots of talks about insurance rates going up and hikes. What are some of the things that contribute to these rate increases?
Yes, there's definitely a lot going on in insurance, and I think everybody's felt it when they get their policy renewals recently. There is a big misconception, I think, in Minnesota. I hear a lot of, we're paying for the big hurricanes in Florida. And although insurance rates are going up across the nation, there are a few states that are hit a little bit harder. And PNC Specialist magazine put out an article recently, and it highlighted the top 10 states that paid out the highest home insurance claims from 2018 to 2022. Florida was ranked number 5th.
Oh, wow.
Minnesota was 4th.
Wow.
So in that 4-year time frame, Minnesota had overall higher claims payouts than Florida. We don't think about how these hailstorms and how expensive they are. In 2022, in Minnesota, it was $6.3 billion hailstorm, one hailstorm.
Wow.
And I know when that was because that affected our house and roofing, siding, all of that.
And with inflation, that's kind of the second part of it that's creating this perfect storm. So the inflation, they're saying that over 10 years, the cost to replace roofing and siding has doubled, and the average hail claim is now $30,000. So it's kind of those two things coming together that's really driving the rates up in Minnesota.
That makes a lot of sense.
I know I got a new roof.
Oh, you did? Lucky.
Yeah.
So with this information, what do realtors really need to know when they're talking insurance with their clients? I know some things are really obvious, but what are some other tidbits or nuggets that are good to share?
Well, because of all these payouts, and insurance companies are really upside down. I think they paid out in 2022 $1.90 in claims for every dollar coming in.
Wow.
In 2023, $1.60. So they're really tightening up their underwriting, who they're going to take on, along with the rate increases. And so one of the things is they inspect every home after the policy is set up, and they've got 60 days to cancel it based on the conditions. Although when you're purchasing a new home, a lot of times it's in its best shape. There aren't a lot of concerns. There are a few things that may not get picked up on when the buyer does an inspection. One big thing is trees. And trees touching the home, bushes that are overgrown. They might not flag anything from a buyer on an inspection, but it can on insurance. Also some like cracked sidewalks, and certain loans I think don't need inspections or?
Well, we almost always require an appraisal. If a buyer's putting less than 20% or less than 20% down, we'll require an appraisal, but inspections, we're not really requiring those on the, insides of the home, the inner workings of the home, but we're definitely still doing appraisals for most loans.
And that's where it picks up on some of the exterior things.
Yep. Cracks and peeling and chipping paint, things like that, with especially government-backed loans.
Oh, right, for sure.
So how, Erica, would you say that realtors should advise potential sellers on their homes, in terms of inspections and prior to listing their home?
One of the biggest things that we're seeing arise now that can get really complicated is when roof damage is found when there's already an offer on the home, and maybe it's found by the buyer's inspection, and it can get really hard on who pays and how it's paid and getting insurance in there. So, one thing I would recommend is, having a licensed contractor come out and look and see if there's any sort of damage on the home before they even list it.
Can you talk a little bit more about why a contractor versus somebody else?
So I always recommend going to a contractor versus calling your insurance company to see if you have hail claims or see if you have hail damage. Insurance companies, when you go to get new quotes on your insurance, they look at your frequency of claims, and that can include even a zero payout claim. So if you call your insurance company to come and look and see if you have hail, and you don't, a claim was open and it's going to show a zero payout. It won't affect your current home insurance, but it can affect when you shop your rates in the future. So instead, get a referral, maybe from a friend, family member, your realtor, someone that knows a good roofer that can come out and take a look, and they'll have a good idea if it's enough for a claim.
Sure. No, that makes great sense. Thank you.
It's a great suggestion, too, for sellers.
Yeah, definitely. Don't want to have that extra claim on the record if
No.
you don't have to.
Right. So this question I'd like both of you to answer, and whoever makes sense to go first, feel free. But how are insurance rate increases impacting mortgage approval levels?
Do you want to start?
I can start. I think we've seen a large increase in our insurance rates on a monthly basis, and the way that we qualify our borrowers on a pre-approval level is to make sure that we are estimating accurately what the homeowner's insurance cost will be. And so, a couple years ago, we were usually estimating about $150 a month. And now we're probably at minimum $165, depending on the area. And so even if it's only a difference in $15, it does make a difference for our borrowers and their ability to go out and purchase at the highest level. And so, we've seen a lot more challenges come up on the back end when we inaccurately estimate where the insurance level is going to be on the pre-approval, right? Because a lot of our buyers, first-time home buyers, they don't have a lot of room within their debt to income and within the cash that they have in hand to be able to fund their own insurance policy prior to closing or increase their monthly payment. So that's one challenge that we've faced with these increasing insurance rates, is just adjusting our pre-approval levels to make sure we're accounting for a potentially higher policy on a monthly basis, because it's challenging for us. Amidst increases in interest rates and obviously increasing home prices. So,
yeah, because it can get us in a spot too.
Yeah.
Because I've sent a lot of binders over, and it's like, oh, we need to,
Yep.
be lower.
and you hear back from us, no, we were quoting this at 150, and it's like, nope, can't
Even
make
when
it
you
happen.
say 160, I'm like,
Even that's a little low, yes.
What I see too, and there's ways that us insurance agents can work with the mortgage lenders and our customers. There are coverages that can be adjusted. One thing that I do warn about is if you do adjust coverages, that they should be put back on after the closing is done and paid for by the buyer. So for instance, you could put on a higher deductible, or you could take off maybe an extra endorsement like a water backup coverage, something like that to help it out. But then you always want to make sure that it's agreed upon that that's going to be put back on, as soon as the closing is over and paid for out of the pocket of the buyer.
Yeah, and we've had to do that a couple times, and I think it's a good tip for realtors to know if you have your lender coming back to you telling or saying, we're having a hard time with the debt to income, we don't know how to get it back in check, maybe reaching out to who they have for insurance to suggest removing or adjusting the policies in that way, because some lenders might not know that's an option, and they may not communicate that to the insurance agent either. So,
yeah, exactly. So really just communicating about it and
working as a team all together.
right? Yeah, I think it's more than ever, it's important to communicate with everyone and work together. And, that's why it's good to have people
Yeah, no, great insight. Erica, I know prior to starting our conversation, you said that people are really shopping around with insurance right now, and you're hearing from a lot more people. How can homeowners control their insurance policies? What can they do? And how can a realtor potentially play a role in that as well?
I think it's definitely a good idea to check on your rates every couple years. We were previously talking about insurance scores, and I think that's one big thing.
Yeah, I have a little note on it.
Yeah, how insurance score is, works on your credit score, and that can affect everything from
from your credit score, but also the policy amounts that you're getting and the premiums that you have access to, because if you've got late payments coming up on your credit report, whether it's on a revolving account or a mortgage account, those hit your credit score hard. And we also know by default it's going to hit your insurance score as well. So one thing we were talking about a little bit is reconnecting with your insurance providers or other insurance providers maybe a year or two after you purchase your home, because at that point in time your score may have increased with on-time mortgage payments and responsible credit behavior. You might have access to a little bit better insurance policies just by checking back in. You know?
Exactly. And it can be a good touch point for realtors, even a year or so after the closing, to kind of remind the homeowners and say, hey, recheck this. If your credit is improved, there's a chance that your insurance score is improved.
Yeah.
There are a lot of factors that do go into your insurance rates, and each company weighs it different too. So some companies may weigh credit more than others. So it can be really good to work with an independent agent that can check multiple companies, because we have access to kind of find what's going to be the best fit for you.
Yeah.
We have kind of a rater, insurance raters that we use. And so you put the information in, and kind of each company comes back, and you can kind of gauge, okay, you pick a couple, say, oh, this two companies might look good, and kind of dive deeper into it.
Great advice. And I love the idea of the realtor touch point a year later, especially the people going through that home buying process are probably just so overwhelmed with everything in that snapshot of time that, that might just be that, reminder that they need a year later.
And I think, too, maybe even on the front end, because I would, think that realtors may start working with a client a ways before they're going to be buying a home.
True. And, if you hit them on the 3-year anniversary of their home buyer or home ownership date or whenever they closed, and you remind them of their insurance, maybe they'll be thinking, oh, we've actually been considering moving, and you could be the first one reaching out to them to remind them, and maybe you'll get the listing and be able to work with them again for their next purchase. So
yeah. And I like that it's something of substance. There's kind of that tickler file item there.
It's not just a congratulations. It's something that could add value to their life.
100%. So, Jordan, just out of curiosity from your perspective and your everyday work and relationship, how do insurance and mortgage lenders work together the most?
Yeah, I would say insurance agents are probably one of the closest partners that I have in the business because of how much policies have been changing over the years. So I'm always in contact with our insurance partners to see, how we can get the best policies for our clients. I work on pretty tight debt to income restrictions for a lot of my buyers. Right now, we're pushing our debt to income. And so we work together with our insurance agents to make sure that we've got the policies that are the best for the client, both for DTI purposes, debt to income purposes, but also to make sure that they've got the coverages that they need. Because on the mortgage side, we don't want them foregoing coverage just to have a lower monthly payment without knowing the cost of that in the future. And so, we'll reach out to the insurance agent if something seems a little bit high or a little bit low, and we collaborate with them often. So it's really important, I think, for insurance agents and mortgage lenders to be on the same team together and understand what the goal is for the client, because if you all work cohesively together, you're going to represent your team as your realtor, mortgage lender, and insurance agent well to continue the partnership in the business moving forward so that client will always come back to all three of you instead of just one.
Yeah, but great advice.
And the other side of things that we work a lot with insurance agents on too is I've got about 3 clients right now that have come back and said, hey, I just got my roof approved on an insurance claim. How do I get my check endorsed by the lender? And so we have to advise a lot of our clients on how we can work through the endorsement. And so if you've got a good relationship with your insurance partners, that you can call them up to say, hey, how do we work through this endorsement? Then it just provides a better experience all around for the client.
And there's a lot of those.
Yeah, post-closing and all of that. So
from an insurance side, working with mortgage and the realtors, when they come to me for insurance, they're deep into both the, buying or selling, or, mostly the buyers that I'm working with, the buying process and the lending process. And I can feel their overwhelm. And so for me, it's like, okay, I'm going to make this as simple as possible for you. And it's important for me and how I help the lenders out and their clients is, making sure that I take on any of the work, communicating with the lender, and taking anything off the plate of the buyer that I can to just kind of ease what's going on, because it's very noticeable when it gets to me how overwhelmed they can get.
Yeah, and I always appreciate that with the insurance partners is that we can work on it on the back end. So the borrowers will come and say, we didn't even know that anything was going on with the insurance, because we're able to cohesively work well with insurance agents. It's so important.
I know that I always say, if you want to go ahead with the policy, put me in touch with your lender, and then my next email will be, okay, you're all set. And they'll just be like,
and that's the best.
So what advice do either of you have in terms of having the realtor be able to have that initial conversation with their client, whether it's on the buyer side or the selling side?
Well, for insurance, I do think that, I get a lot of referrals from real estate agents too, because it just starts the process earlier, gets the ball rolling on the insurance side of things, so that they do have some time to find options. I also, for my clients that I already insure, I might check a couple different homes for them that they're looking at, or, having them call their insurance agent. Because if they're looking at a home with a 15-year-old roof and a home with a 5-year-old roof, and, they're debating which one, sometimes I can
it's
run
gonna
multiple
differ.
quotes, and it's simple to run quotes. So.
Yeah, I think I don't do a whole lot on the sell side. A majority of what I'm doing is on the buy side, working specifically with buyers, but obviously a lot of buyers are also sellers. So one thing that I think maybe on the insurance side that you already mentioned for realtors is to ask the seller if they've had their roof inspected, like you had mentioned before, to get the contractor out. I think that's just such a good idea. To see if there is a potential for a claim before they even list, so they could list the house with a brand new roof, if possible, or new siding.
Yep.
But on the buyer side, one thing that we always tell our realtor partners to remember when going into a buyer's consultation is to understand what their expectation is for their purchase. Get an understanding of the maybe the comfort level in their monthly payment that they're expecting. Understand, whether or not they are currently employed, if they're on a leave from their job, just to kind of feel out whether or not this is going to be a client that is going to quickly turn into a buyer, or if it's something that you got to nurture a little bit longer. So asking those questions, do you know or have an idea of what your credit score is? Have you already talked to a lender about pre-approval? And if you have they talked to you about what type of financing you're qualified for?
Because there could be multiple options for some people.
And especially when it comes to the FHA and conventional, if somebody is coming to you and saying, yep, I'm pre-approved, ready to start shopping, and you put them on a list as a realtor to start getting homes sent to them from the MLS, and they're actually an FHA buyer, and half the homes aren't FHA approved, or the condos aren't FHA approved, you could spend time showing them properties that they actually can't even qualify for. So I think it's important to have those conversations up front with your buyers. Even if they say, yep, I'm pre-approved and my pre-approval is really strong and I love my lender, connect with that lender and understand what the financing looks like. So as a realtor, you can protect your reputation and also the money of the buyer too. So they're not spending money on inspections and appraisals that ultimately won't close because of a fatal flaw that could have been found out at the beginning of the process.
Absolutely. Good insight.
Thank you.
I know we have a lot of seasoned realtors who probably have lenders and insurance agents and folks they work with time and again. But for somebody maybe starting out, how do they choose the mortgage lender that they're going to work with, or how does that work? Can you talk that through a little bit?
Yeah, so we have a lot of realtor partners that we've worked with for years, and we have realtor partners who we, meet at a communications committee meeting. And really a realtor is able to select however many preferred lenders they would like. But really what I would say for a realtor in choosing to work with a lender partner as their preferred partner is make sure your communication is strong with that lender. Make sure that you and the lender have the same goals and the same priorities when it comes to your clients, because if those are conflicting, you might bump heads a little bit with your realtor partner or with your lender partner. If you are a newer agent and you're looking to come up with a solid base of lender partners, I always suggest just go and meet with people, get their personal vibe, see how well you can communicate with them, and maybe try out one or two deals with them at the beginning. And if it doesn't work, it's okay to move on to another one, because you got to find what works for you and your business, and you don't need to feel tied to just one lender, because not everybody is going to jive with that one specific lender. You might have a client who's 75 years old and doesn't want to work with a 24-year-old, or you have a client who is 25 and doesn't want to work with a lender who they can't relate to at this point in their life. You never know. So it's important to partner yourself with a couple different lenders, but ultimately it is the decision of the buyer. And if they're going to shop around, if they're going to try to find the best rate or the best down payment assistance program with a different lender, you got to let them kind of go and do that. But be open to the lenders that they bring to you, because it is their decision at the end of the day. So,
Thanks. So mortgage rates, are you thinking they're going to stay consistent to where they are now? No crystal ball, I know.
I don't know. I hope that we see some sort of a plateau, and I hope that we've been talking a lot this year about rates just coming down naturally, right, throughout the entire year, and we have not seen that. Right now, especially this week, it's been tough for interest rates. We've seen a few increases over the last couple of days, which is not fun. But I'm hoping that as we go into the fall and potentially into this election season, that we see some reprieve on rates. But I have no idea what they're going to do, and I wish I did, because I would be having people knock on my door every day wanting my advice and wanting my partnership if I could have a crystal ball. But
yeah. Well, and I know we're seeing home prices up and rates up, and I know supply factors into that. Any other insights you can kind of share?
Well, we know that right now it's tough. This market is just, there's been no reprieve on the inventory that's available, on the rates, on the costs of insurance. And so it's tough for buyers right now. It's tough for first-time home buyers. And we can only hope that as we move throughout the summer, maybe as the kids get out of school and the families decide we need a bigger house because all these kids are home right now and we have no room, or they want to get the house sold before school starts next year. Maybe we'll see a little bit more inventory come in, but we know that right now the amount of houses on the market is, I think, at a low for the year.
Yeah, I mean, right now we're seeing about 2 months supply,
2 months supply,
but
yeah.
a balanced market is more of that 4 to 6 months supply. So we've seen an increase, but we're not where we need to be. So I don't know. I guess those are the questions I have for you guys, but I find this a really interesting topic. So if there's anything else you want to share or anything that you want to kind of leave with, please do.
One thing I kind of thought about and didn't mention it earlier, and it got brought up when I was talking in front of one of the new member orientations, and maybe you see this a little bit in the mortgage world, and it is related to all these roofs and claims, but when you're purchasing townhomes and you have an HO6 policy, there is a lot going on with the Homeowners Association insurance policies right now that I think is worth discussing.
Yes.
What happens when a roof is replaced in a townhome association is there is a deductible on that roof. And then that deductible is assessed out to each of the individual homeowners. Those deductibles are going up and up and up in order to try to keep those, they call them a master association insurance policy, in order to keep those premiums down. So they're getting upwards near $50,000. And then if there's, say, 4 units in that building, that $50,000 is split up between them. So then it's assessed out as loss assessment. Each insurance company handles it differently. Some pay the claim on the date that the hailstorm happened. Some pay that loss assessment claim on the date the letter is sent out. And so we're seeing a lot of issues at closing and prior to closing where there are their loss assessments that are waiting. They can take a while, and they haven't issued. Have you seen this?
That's a great topic to bring up, and I completely forgot about it in all of this conversation. Is for townhomes and condo associations, that's a huge, huge thing that's come up for us over the last 12 months is the roof claims and the insurance, the associations not having enough in reserve to be able to cover what the repairs might be on the roofs if they're not finished. And so like the HO6 policies are increasing, but we've also seen a lot of townhomes now switching over to HO3. I don't know what the other policy name is, but we've seen them switch over to more of like similar to the single family home policy structure where they're higher priced.
Well, Yeah, because the association policies, they used to always cover the exterior.
Yeah, and they're dropping those policies now, I think.
Yeah, and that's really putting the insurance industry in a tight spot because an HO3 probably isn't. HO3 is a homeowner's policy versus HO6 is, buildable for the town homeowner. Yeah, so it's...
Yeah, we've seen that. And it stinks for a lot of the buyers because they'll go from a $250 association dues and maybe $50 in insurance policy, and that's actually estimated maybe a little bit high, but then to $250 for the association dues and $150 for the homeowner's insurance because it's costing so much more. We've had that happen a couple times with townhomes specifically, not so much condos. But.
Yeah, condos stay a little bit. Yeah, and the last assessment issue is, making sure it's disclosed by realtors. And, because that can get you in a sticky spot if it wasn't disclosed by the seller, that they know this assessment is coming. And all of a sudden the new owner's in the home and they get this last assessment letter and, their insurance company is, oh, no, by the date of the storm, and they didn't have insurance on that date.
And that can add up really fast.
Very fast, 10, 20,000, so.
Yeah, big topic. I completely forgot about townhome
I know,
and
right?
condo policies.
Well, on that note, anything else? Or that's great information.
Yeah, I don't think so. I think we covered a lot.
We did cover a lot of ground. So, well, Erica and Jordan, thank you both for being here, and we'll have you back to possibly discuss this further.
All right, well, thanks, Jennifer.
Thanks for having us.
Thank you.